All right, guys, we're recording how I trade futures, and tonight we're going to discuss the Ranger and Mover indicator. For those that do not know, we got our update tonight, so everything's good to go. It is version 1.7, so it's I've been trying it out. It's actually really good. It works well. So how I'm going to start this tonight and start a little bit different is I am going to talk about these things. So we've got the indicator will show the open range. It'll show the open range entry and stop, open range fibs, does supply and demand zones, Fibonacci pivots, floor trader pivots, previous day open, high, low, close. That's what that means. Current session, open, high, low, and close. Previous pre-market, open, high, low, close, and current day open, high, low, close. We're also going to talk about the SpotBot mover. Yeah, the update. I sent that out. And what settings? I use a WMA 13. So let's get started on this. A lot on the screen, I know. A lot of lines. What does all this mean? It means, if you know how to follow it, $1,305 today on NQ trading one contract. So if you were, some people trade 10 contracts or whichever. There was actually someone today that told me that they trade 100 contracts on NQ, which is I would never do that. The reason I wouldn't is because the market makers can see you. So when you trade 100 contracts, you will have a lot of market makers that will actually see your trade, and then they will do the opposite of what you're doing. They'll do it on purpose to take your money. So how do we get these trades? How did we know where to get in? How did we know where to get out? Why is this on 300 positive? This one's 490. Why not 500? Or why is it not 400 or whichever? What did all these green numbers and stuff? I don't want all that stuff on my screen, some people say. Well, you know what? I don't trade with most of this stuff on the screen, but this indicator works for different traders. So some people might want to trade a risk reward ratio. Some people might want to trade these pink fibs, Fibonacci. Some people might want to trade these gold zones. Well, where do I get in? Where do I get out? How do I know, what to do here? There's a lot going on. Well, on this one, it's set up for the U.S. market. So this indicator will trade 5 markets. You have the Australia and Tokyo market. You have the Hong Kong market. Well, the Australian is at 8 p.m. Eastern time. I'm going to talk about Eastern time the whole time, so I don't have to keep saying that. So at 8 o'clock is Australia. 9:30 is Hong Kong. India is 30 minutes after midnight. London, Paris, and Germany are at 3 a.m. And then you have the U.S. market that starts at 9:30 a.m. Now, the open range, we look for the first 10 minutes of the opening. So if we open at 9:30, then we are looking for 9:40 before we even trade. We don't trade between 9:30 and 9:40. That is actually setting this bar. So now let me back this up, and I'm going to show you all this, and then we're going to break it down, and I'm going to show you what each thing on here does for you. And I'm going to break it down to where you can understand and you won't be confused by the end of this video. You'll be able to see how it works. It's very easy, actually. And I will say this before I even go further. I'm going to say this red line is our profit target. And this yellow line, one tick above that, is our entry. And we're profit, we're trying to get to here. So we didn't make it today. But if we would have, then that's $3,445. So about $3,500 you would have made if the market had actually done what our targets are. Well, it didn't today. Now for a short, we look at the yellow line and we go one tick below, which there is a green line there. I know it's kind of hard to see. Let me get it pulled up here so you can see it a little better. There is a green dotted line here. That is our entry. And that's where we want to put our entry before the target even comes down. That's where we want to be. So on this, we are going to be looking for the target or the entry here. And since our red line is here, where do we go? We're going to discuss that. And also, you have a lot of other stuff on here. Again, I personally don't use all of this. I use a certain part, and I'm going to show you what I use. And it does away with a lot of lines on here, but the lines are on here for you. You may not want to trade like me, and that's perfectly fine. As long as you're making money, it doesn't matter. The main thing is that you make money. That's at the end of the day, you need to make money. So I'm going to run through these trades real quick, but I'm not going to discuss why I did it yet. I'm just going to show you what the trades were. And then we're going to go back through, and I'm going to show you why we took the trades there and how we chased it and why was the exit where we did. So I think that is that's the end of it right there. So the very first thing in the morning is we broke that yellow line at after 9:40. And we went up, we took $300 profit, then we took $490. Now, if you look at this, you'll notice that we took profit here. We didn't take profit at the top, and there's a reason, and I'm going to go over that. So on this next one, we lost $300. So whenever it broke through, it pulled down to our red line, and this red is our stop. On NQ, we use a 60-tick stop. Now, you can change whatever you want. That's fine. You might want to go to a smaller, but a lot of times you'll get stopped out, and then it will take off on you. So I have found so far at this point, 60 ticks seems to work pretty good. It's $300 per contract. That's a big thing to stomach. I know, $300 loss. But you made $490 here and $300 there. Then we come down. We barely poked through that yellow line right here. So let me make it a little bigger so you all can see it. I know it's easier for me to see on my screen than you all can. I understand that. So I'll try to make things bigger for you all. So we have that little wick that just come right through, and that entered our trade. Now, we don't wait till it comes down here and decide if we want to trade. When the candles are up inside between the yellows, that's the open range, we have our buy signal there. Now, one thing I didn't say is the open range. What are these yellow lines? I'll start there first. At 9:30 is the open. And that is the very first part of your opening range. 9:40 is the end of it. So we had a low in between 9:30 and 9:40. We had a low right here. And then we had a high right there. At 9:40, it double topped it. And then after 9:40, it run through. So that's how we get our yellow lines. It's our opening range from 9:30 to 9:40. Yes, you can change that. If you wanted to have a 15-minute, a 5-minute, 20-minute, whatever you want, you can change that in the settings. The 10-minute seems to work pretty good, and it takes off. So now we have a little wick come through, and then we got stopped out right there. So it's a $300 loss. You know, it went through, and a lot of times like if it was, I don't know, a lot of times you will go through on something like this, and then all of a sudden it will drop. And that's good, but in this case it dropped, then it went right to here, and then it bounced out. So whenever it bounced out, we hit our stop. When we hit our stop, it's dead. We don't even get in a trade here. We don't even touch it. We just let it go until it goes back over the yellow or back under the yellow. That's what we're looking for. So now we come back over here and we wick through. So once we wick through, then we pulled up and we hit our stop right here. Once we hit our stop, that was a $300 loss, which is right here. So I'm not cherry picking this at all. I'm showing you actual trades that you would take and actual losses that you would also accept as well. So when you're looking at this, these are accurate numbers. I'm not bypassing the trade because we would have lost. And every day that I run this, it makes money. I have not run this on any day in the last month that it's lost money. So on NQ and RTY, I have found a lot of people like to trade NQ, but this works better, in my opinion, on RTY. And I'm going to show you the RTY in a minute. So now we've got another trade that we stopped out there. As soon as we stopped out on this wick right here, Then we entered right here because we went back through. Again, you go ahead and hold this. If you wanted, you could have moved your stop up here if you wanted, but the strategy is at the $300 mark, which is 60 ticks on NQ. Then you entered another trade here. And when you did, it went all the way down. We took our profit here, $1,410. Very good reason why we took profit there. I'll show you in a minute. So now we have just in this right here, we started trading at 9:41 and we ended at 11:04. Now, by doing that, we actually made right there, I don't have it figured up exactly. There's 300, there's 790, and then we take 600 off for these losses. 790, so that'd be 190. We lost another 300, so that'd be 110 in the hole. And then so that would be $1,300 profit right here. Okay, so there's $1,300 right here, and you traded from 9:41 to 11:04, so that's roughly what, hour and 25 minutes. So you got about that much money. Now, when you come back on over, you can trade the rest of the day, or if you have a goal of $1,000 a contract per day, you've already hit it. So just quit. Just walk away, go do something else. You know, go walk on the beach or whatever you want to do. Just quit, because you will overtrade if you keep going during the day. But that's not to say you won't, make money. So right here, we were up $1,300, I think is what I said. And then right here, you ended up making another 305. But then you lost 300 off of this. Now, me personally, being at, 337, I would not have entered that trade at all. That's a trade I just would not have done because it's only 20 minutes till the end of the day. So I would not enter that trade. But now the strategy would have. So if you had this on a bot, which the bot is coming soon, now that I've got my final indicator, we will keep on going. Let's see here. A question. What is the entry on the fourth trade? I cannot see where you would have had an entry. The fourth trade. Let me go back here. So we had 1, 2, 3, 4. Right there. There is a little wick there and then a wick back. So we actually come through right here and then we stopped out right there. So this right here was our entry right here, and right there was our exit. So this right here was a trade. And that's the fourth trade. You're welcome. And again, anybody has any questions, put it in the chat box. I want to help you. Any questions you have, I want to be able to answer them. That's why we're doing this. This is live training. This is open-ended. I don't let people talk because some people can't be quiet long enough, and it just keeps on going. Am I taking them on live account? When I can. Yesterday and today I was traveling, so I did not. I was in Charleston, South Carolina, so yesterday and today I did not. But normally, yes, I do take them on a live trade. So this week I wasn't able to. I did take like a trade here and there, just scalping. I couldn't follow the indicator. I was scalping on my own, just trying to get some trading done because it wasn't in an area to where I could trade. Let's see, did it take another trade on the next candle? Yes, it did. On that fourth, it did. So let me go back here. And that is where we got the $1,400. So when we went up, it actually entered another trade right here. So I can actually move this over now that I got closer. It would have actually entered the trade right here, but did not wick up to our stop and get stopped out. So that is a place that, and with this trend coming down, and we're going to discuss this red line, what that means in a minute. But with that coming down, I mean, maybe you wouldn't have exited out here. Maybe you would have left your stop up a little higher. I don't know. But let's just play it by the strategy. The strategy says you would have got stopped out and lost money. If you would have raised it up, there's a chance you might have got stopped out up here. The best thing to do, someone emailed me today, sent me a copy of their trade. They had their bracket order in with their buy order here and their sell order down here. And RTY was ranging, and they asked me if I would enter that short. My answer was this. follow the strategy. If the strategy says do it, do it. When you start putting emotion in this, your strategy is not going to work, because then you're playing it your way instead of the strategy. So always follow the strategy. Now, my main strategy is when I make the amount of money I want to make per contract, I quit. I don't need to keep on making money. Now on this one, maybe you went ahead and just kind of left your stop up here a little bit and just kind of let it go, but you don't know this is going to happen. What you do know is this right here is happening. So if you had this on just a chart and trading, you don't know this is going down. But there is a reason we took our profit here, and I'm going to show you here in just a few seconds. I'm going to go over every bit of this and show you why you enter and exit where we do. Follow the strategy. If you follow the strategy, by the end of the day, you're going to make money. I have not had one day that's lost money. Right here, again, I wouldn't have taken that, and if not taken that, you would have ended up making $1,605 is what you would have made. But I included it because it is part of the strategy for the whole day. Don't cherry pick. When you come in here again, when you make your 1,000 a day per contract, or 500 or whatever you're looking for, just quit. Just walk away and go on. So does anybody have any questions with what I've just gone over? And I'm going to break these down. I'm going to take all of this off the chart, and I'm going to let you be able to see why we did what we did. And I'm going to leave the entries and exits on here, and as we go through the chart, you'll be able to see it. Okay, so one thing a lot of people want to know right off the bat is, how do you get these on here? What settings and so forth, and what do you do? So we have the SpyBot Ranger Indicator 1.7. You can see the versions I had in here, and all these versions were within a week. And I finally got my final version in that I like real well. So right now we have a choice. You can pick this right here, and let's just say you're in, California. There's Pacific Standard Time. You can go Mountain Standard Time. There's Central Standard Time. Maybe you live in Saudi Arabia. You can click on I don't know what that is, but you can click on that. And when you do that, it will change the times here. So if you click on, like right now, that's 18 and 17. If you go to Central Standard Time, this 1817 will change. It just went back an hour. So Central is 1 hour behind me. So with it being 1 hour behind me, then it will change this. It changes everything according to what it should go to. Now, if you're trading, I'm going to go back to Eastern because that's what I trade. So I'm going to go back to Eastern, and when I do that, it will change all your times right back to Eastern Standard Time. This helps everybody because not everybody trades on Eastern Standard Time. Even though I think everybody ought to live in Eastern Standard Time, they don't. So we have to make this for everybody. The other thing is you have your different markets. Let's say you want to trade the Australian market. If you do that, this will come in and it goes to right there to the 8 o'clock time frame. If we go to the Hong Kong and go in, then we're looking at 9:30. So you can change these to whatever you want. Let's say you don't like my settings, you want to do your own, then you just go to manual. If you go to manual, it takes out all of this. There it is. It takes all that out, and then you can input whatever time frames you want. So you can trade this at whatever strategy you want to trade. So I'm going to go ahead and go back, and I'm going to show you because we're working on the U.S. market. So I'm going to go ahead and go back to here. And also, you can disable your lines on here. So I'm going to change that back. And let's say that, let's say you don't want that yellow line there. It's just not any good for you, which that yellow line is good. You can see that it trades from it. But let's just say you don't want the opening range mid. You can click that and then come here and it takes it out. So you can take off whatever you don't want to trade, which is very important because there's a lot of information on here, but you don't need it all at one time. Maybe you're a Fibonacci trader, so you want to leave your fibs on. Maybe you don't even like fibs, so you can just turn them off. So if you come in here, you can just click on all of these. and turn them off. So now these pink lines will disappear. Let's say that you don't trade risk to reward, which I don't. I don't trade that way. I trade by support and resistance. So if I wanted to turn all of these off, I come right down here, and now they're all gone. So now that we're looking at it a little bit different, now there's less lines. There's less here to look at that you don't need. Now I trade my zones, which is what these gold shaded areas are. They're zones. So areas of supply and demand areas. So I trade off of those and I like them. Now there's certain fibs that I do like, and I'm going to show you what I like. So the pre-market, we don't even trade. Now there is another way to trade it, but we don't trade it with this strategy. I'm going to have that on a different live stream that we do, the training, and I'm going to show you that. I don't want to put too much in one live stream. I just want to show you how this trades, and then I'm going to show you a certain part of how it would trade that actually help you in making better decisions. Now, as you can see right through here, this zone is going right across, and look how we went right through it. So let me make this a little bigger for you. So we have this zone right here. When we come down through it, this is how I trade. So on this particular trade, as soon as it goes through a level and busts through it, then you move your stop down here. So as you move your stop down, so on this particular case, we would have, I'm going to show you this one trade, and I'm going to go over each trade for you. So my stop would actually be right here. When this red candle busts through it, I'm going to bring my stop to the bottom of that. Often, this will come up, hit the stop, and then drop. But what I like to do, my style of trading, is I like to protect my profit. So a lot of times I will take and just chase a candle down. If I'm real close to my profit target of where I'm going to go, say I'm trading to the top of this zone, then as these candles close and open another one and close down, I will chase right on top of the candle of that, and I'll just keep going until we make more candles. Now in this case, you would have stopped out right here if you would have done that. But if I'm letting it go, I'm going to go ahead, once it comes down and then goes through, I'm going to bring my stop there. Once we push down pretty hard, I'm going to go ahead and bring my stop to here. Worst case scenario is you would have stopped out up here at 1040. But I'm not going to let $400 or so get, away. I want to secure that profit. So I bring my stop on down. So let's go ahead and do this. Let's go ahead and go back here. And then I am going to put on the screen how I trade. So on this one would be, let's see here if I do that one, and then let's see here. Let me find it here. RTY is what I trade. I don't like to trade NQ. NQ is just it whipsaws a lot, and that's just not the one I like to trade. I think it's this one right here that shows everything I want. Yes, this shows the fibs that I use and everything. This chart is set up exactly how I trade it. I use these fibs, and if I come back over here, and these are how I change everything. I don't leave all of those letters and everything on. I have them on, and let me show you this, like on the fib. If I open that up, each one of these, you can change the Fibonacci numbers that you want. So you don't have to use mine. You can change those. And also, if you come, see, back down right here, you see Fib 1 label. I've just got the numbers. Now, it starts off and it says OR Fib 1, OR Fib 2. I don't need all that information. I just want to know what fib it actually is. So this one's a 15.3, a 23.6. So you can take a lot of information off of your chart manually. That way you don't have to look at everything. There's a lot less on the chart. The less that's on the chart to read, the better. I know that each one of these pink ones are a fib number. Now, if you want, down in the bottom, you can change all of these. So down at the bottom, you can change, all the coloring of them. You can make them thicker lines or whichever. Like on this one here, you can change whatever you want. You can do the dot, dash, whatever. So all of that is interchangeable. So now we're going to go back over here and I'm going to show you why I would have traded where I did. As you notice, I've streamlined a lot of information on this chart. Now on this one, this first trade, and I'm just going to show you a couple trades and then you'll notice it takes too long to go through every trade. So on the first one, we entered right here, right on this green area. Let me make it a little bigger so you can see it. Now in the video for you all, it's a little bit harder, but I'm going to enter on this green dotted line. And then when it goes up to here, and then it pulls back, I'm going to be in the trade and my stop is going to be, actually when this pushes up and gets to 5 points, I bring my stop up to 1 point on the NQ. So when it pushes up 5 points, which would be, there's 60, when we get to right here, I'm going to bring my stop up to 1 point. Now, it's not in the indicator, but what I will do, just so that I can see it, is I will come here and I will go 1 point up. So that would be 61.75. I'll put that there, and then I will also come up to 66.75, and I will put these in here. So when that pushes up, I know exactly where to put my stop. So that's why I put it there. And then when it pushes over this 5 and goes up to 10, I will use, not always, but I will sometimes bring it on up to the 5 point. Normally what I will do is I just want to get my 1 point so I don't lose any money. I mean, the odds of you getting stopped out right on 1 point is slim. You're probably going to get stopped, 1 or 2 ticks below that, so I put it at 1 point. My main thing is to either break even or maybe just lose a little bit, but not to lose $300. So that's how I play this. Once it pushes through this fib, now I bring my stop up to here, and then when it pushes up to this next fib, I bring my stop to right here. So when you push through a level, you push through it, and then you hit the next one, your stop is going to be up here. Now, if it pushed to right here, and would I wait until it got all the way up here to do it? If it's up in this area, I'll bring my stop right up here just so I can protect my profit. So if we did this one, if we got in right on that green line there, and if we went right to here, that's $310. It's actually more than 300. So it's actually 310. And then when that pushes up, if I like the profit of it, I might go ahead and bring my stop all the way up there. I would rather secure $465 in one trade as to try to go for this one up here. I may go ahead and do that. Then again, maybe I leave my stop right there and I just let it keep on going. That is something that you have to make a decision on, and only you can. I can't make your decision for you. But with me, if I can make $500 a contract on one trade, I'll be honest with you, I'm happy with that. So if I'm trading 10 contracts, that's $5,000. So why would you want to give up $5,000 to get, maybe come down here and get break even or to get that one? You've got to secure profit, and that's just how I trade. There's a lot of people that do the risk reward, to where they, if they can't get 3 to 1 or 4 to 1 or 5 to 1, they would rather take a loss. I don't trade that way. I want to get in here and get my money, because NQ will whipsaw on you, and I'm willing to, or not willing to, give up that profit. The difference between here and there is a lot of money. So 465, when that pushed up, maybe I'll go ahead and bring my stop halfway between this fib and that fib. I might do it. But the strategy is to bring it, as soon as you push through one to get to the next one, your stop goes right here. So that's how you play it. Instead of playing on a 1 minute, you could run this on a 100 tick or whatever you want to do. And it does, the time frame does not matter on this. I don't really trade a 1 minute. I'm showing you on a 1 minute, but I usually trade NQ on 100 tick so I can see what's going on. And I'll show you what it looks like here in a minute. So on this one, we ended up entering another trade here, and it doesn't show it on the chart, but let's bring this down so you can see it. I've got it too far over. And I'll show you why we took that trade where we did. There it is. So let's bring this over here so we can see it. Again, I do not fudge these numbers. I mean, they are accurate to the bone. There are several people that trade with me during the daytime sometimes, and I mean, I show exactly where it would be and why. And what you have to do is you have to manually move it. Now, when I get the bot done here in a few weeks, the bot will automatically do every bit of this. You won't have to do anything, but just let it go. On this one, we entered a trade here. We pushed over this, and where stop comes up, and then it went ahead and pushed through here. Then we go ahead and bring our stop up to here. Once it pushed up and went through that, we bring our stop to there. And then once it pushes on through, like how it did over here, then we go ahead and bring our stop up to there. So right there is $490. You could have got more money. The odds of you getting that tip is like slim to none, but you could have. But how I trade it is as this is going up and down, when you get this big old candle, it pushes hard, and it may pull right back down to here and then opens right here. And then it pulled like one tick over top of that, so we still would not have been stopped out. And then when it pushed up, we would be right here. Once we almost got to this one up here, I'd be bringing my stop. And then when it come back down and went to open over here, that's where it got me stopped out. So this one actually stopped you out right there. So that's where you actually would have got stopped out. Now, again, a lot of people would rather just do a risk reward and let it go. So does everybody understand how I move my stop and why I move my stop? Does anybody have any questions with that? Okay, no questions with that. So I'm going to show you one down here that and you'll understand why I have this mover indicator on there. So when we have, actually this one didn't do it, but I'll show you another one. This mover, as long as it stays red, you stay in the short. As long as it keeps on going down, you're just going to go and do it. Now, what you're going to do is you're going to still, once you get through one of these levels, you bring your stop down. If you want, you can just bring it and just make it right on the top of this mover if you want. But I usually follow those lines. I usually don't follow this right here, the mover. But now when it comes down here, if for some reason we had not had this zone and taken profit, where this turns green and we have a green candle, I would have definitely been out at the height of this wick right here. So when this one pushed out, I would have taken profit. This is not a good example, but a lot of times it'll come down and then you will get a candle that will close over that, and then you'll have another one and it turns green. That's an exit signal, and that's why we use the mover. I am going to show you another way to use the mover to where you can make more money when the ranger indicator is not telling you to enter or exit or trade. You can use the mover with the ranger and actually make a little more money as it comes back to it. So when this one, as we broke through these levels, I would bring the stop down as it goes. You can see this right here is just trading straight down. I might be a little bit, like bring it up on top of the candle, and then when this one goes and keeps on going. But when we hit this zone, that is a good indication that we may bounce out. So I would be having my stop kind of close. With having this fib here, it would be right there. If I have my stop right here, and then I'm going to go ahead and let it go, when this one broke through this zone and come down to here, my stop goes to right there at the bottom of the zone. That's where you go. By putting my stop at the bottom of this zone, I am protecting this profit. And what happened? It come down, it pushed through the zone, or this fib. When it pushed through, that is a good place. If you wanted, you could have got some more profit here. But I'm willing to risk this little bit of profit here to go down to here. If it started going, say down in this area, I would be putting my stop right here. So I use the fibs. Now this green line is a risk to reward. I do not use that. That's not a support and resistance line. Your purple is. So I do have a risk to reward of 1 to 5. A 1 to 5 is making $1,500 on one contract. So like this one here, if you had a risk reward of 1 to 5, you would have had your profit target right here, and when that red candle come down, you would have taken profit there and actually made more money than here. But I prefer my fibs and my zone. Those are the two things I like to trade. But that's just my strategy. And the reason I have all of these other profit targets and stuff in the indicator is because just because I trade it don't mean that's what you want to trade. I make it to where you can pick what you want to do it. So if you don't like risk reward at all, just turn them all off and you don't even have it on there. Now on this one, let's see. Let me show you a mover. I'll give you an example of an exit. Let's say that the yellow line was here, and let's say you entered that trade right there. So just this is the way I can show you how to exit based on that mover. So let's say this right here was our yellow line, and we entered a short, and it come down. When this candle popped up over here and closed right there, then my exit, my stop would be at the top of that wick. Now when we come down and started making red ones again, then I would go ahead and leave it there. And then when this one popped up here, I'd put my stop right there. So when this one closed down and then it shot up, I would actually exit right there. So I use the mover as it's a good signal. It's just a moving average. That's all it is. I use the weighted moving average 13 period. And that is a good, in my opinion, a good moving average in order to protect your profit. As soon as you get this mover starting to change color on you, that is a good sign that we do have a reversal. You can also look at your candles here. You come down and you're ranging straight across. That's a good indication that we might pop up. So that's how we can use the mover for the exit. So does everybody understand how to use the mover for the exit? And why I actually include it with this, or not include, but why I use it with this indicator, the Ranger. Any questions on that before I move on? Okay, so now, how can I use this mover to go back? And I'm going to touch on this just a little bit. I'm not going to go too much in because it's really a different course or a different training. But you have higher highs and lower, or in the higher lows. As soon as you start seeing a trend difference go up, then I will use this mover. Like right here is a higher high than there. So there's one. So let's go ahead and make this straight across, just a line that we can use so you can see it. So we have a lower high here. Actually, I guess it would be a higher high, a lower high. Then we made a higher high. We can't take this one. We have to make two higher highs before you enter a trade. So right there, we broke through. Then we come right up here, and there's a higher high. And this is a higher low. We enter when this candle closes above the mover. Let me get closer for you. So we have our higher high right there. And then when this broke through, we would actually, let's see, let me look here. Let me go back. I want to tell you the wrong thing. Because you got to make two higher highs. Do we make two? No, right there is, no, because we have that. That's a lower high. This will be the higher high. And then when we hit that one, that would be a higher high right there. So this would be our second one right here. And then when we pull back, our entry would be on that candle right there. So that one is at 43.75. Our stop would be at the bottom of this one right here. So 43.75. So you're looking What is that? 43, so about roughly 20 points is where your stop would be. Now, that's a big amount of money, okay? Now, when you're watching this, if you see that this went there, it pulled back, it went up, and started coming down, a lot of times I will go ahead and look at these fibs and enter right on that fib. But I'm looking at this green mover. If it's staying green and not turning red, I'll feel comfortable going up. Now, when you start trading back to this yellow line, you're gambling a little bit because the main strategy is to short below it and long above it. So when you start using the mover and you're trading back to it, you will struggle because there is so much pressure from the sellers pushing this down that if you look through here, there is a lot of chop just right, really from right here to there is a lot of chop right here. So it's hard to sometimes go back. So you have to watch yourself when you do it. And you're not looking to go for a real long target. You're really looking to go in and scalp a little bit as you go. A lot of times you can get in, like say you got in here and then you can go long here. And then whenever it comes back and breaks that mover and closes below it, that's your exit. Now, I don't think that trading the mover by itself is very good. But I think when you start looking at your fibs, where your fib levels are, because it's based off of your open range, and you're going to struggle. Like right here, it went up, pushed it, and you can see right there it struggled getting over that. You're also in this zone. But when you went up and you bounced off this zone, right there is a place that you can get in. So this is going to be a different training, and I don't want to hit it too much because I don't want to overwhelm everybody. The main strategy right here is to short below the yellow and long above the yellow, and make sure that you take your stops and you chase them through your different levels that you're going to have. If you do that, you're going to make money. Don't even worry about trying to get back, because when you try to get back, a lot of times you're going to get yourself in trouble and you're going to give back all of this money. So what I suggest to everybody, and there's a lot of people in this room that have already bought this indicator and trading with it, and I've got some good reports from some people. So, it's just a matter of learning it. When you first get it, you should trade sim a few days just to make sure that you're understanding how it works and you get comfortable with it. And then you switch over and start trading live with it. That's with any indicator that you ever purchase. You always want to trade with your sim in the beginning and make sure that you understand it fully before you lose money. This indicator will make you money every single day. If you trade it through the whole day, it will definitely make you money. If you, like we have right here, we have, well, I won't say definitely because I guess you could always have a bad day, but in the last month or so, every day that I have checked it, it's not lost money. So I'm going to show you. Does anybody have any questions on NQ before I switch over? I'm going to go to RTY because that is my favorite one to trade. I love RTY. Like right now, we are coming down. We're actually setting our pre-market high, which was at open, and now we're down low. And we can set this up on a Australia market and show you that here in a second. So no questions. I'm going to go ahead and go to RTY. And I'm not going to go through all the trades because it works the same way that we just went through. But today, you made $1,330 if you would have traded this all day based on the strategy only. That's not trying to trade it back with the mover or nothing. But that is using the mover and your fib levels and such that I use. And I'll be more than happy to give you the settings that I use for this. Just because I use them don't mean you should though. But they work for me. I like them. There's certain fib levels that I really like, and I built this for me. I didn't build it for everybody else. I built this for me to trade because I knew what it could do. Now this one here, we're just going to hit a couple trades just to show you what I did. And it's exactly the same trading that I did on NQ. We entered right here on this green candle, and then when this pushed through and went through that one, my stop would be at this fib. So whenever it pulled back down, that stopped me out $125. This one right here, we entered a trade here because this is coming down. We actually closed there, we opened here, we pushed up, and then we pushed back down. When we're coming back like that, then when we pushed up, that one didn't quite get it. It actually got it on this candle. It might have got it there, and you still would have been fine. Your stop is down here. And then when this pushed up, and then pushed through this level, then we took $200 because when it pushed up, we didn't get to that one, but we did push through to bring our stop up. Same thing with here. We went right up, we hit our zone, pushed through here, we put our stop right there, and when actually we had our stop down right here, and then when it pushed through there, we're still down here at the bottom of our zone, and then when it opened up here and pushed through to there, then we brought it to this fib right here. Now you could have put it right across the top of it, but you didn't have to. RTY has a 20 tick stop. That's what I got on it. So actually this one here, I need to change that, by the way. Thank you. So on this one, you come down, and I've got it on 60 right now. You put it on a 20 tick for RTY. That's what I use. So on this one right here, we come up. Actually, you would have got stopped out there. So you pushed up, you would have gotten, so that's wrong. I'm glad you brought that up. I don't want to lie. 73.8 and it's 76. Yeah, you would have got stopped out right there on that one. So you would have lost the $100 on that. That's my fault. When I did this, I was doing NQ and RTY at the same time. This one right here, you would have actually made money though. So you would have stopped out on that one. You would have got in right here. That pushed up through there, so you would have actually made 125. So you've been $25 to the good on these two right here. And then when this one pushed up right here, these would be the same. We pushed up here, this would be the same. No stop out on these. So these two would have changed. The other one, I don't remember how much it was. But these right here pretty much equaled out. $25 to the good. We come over here, and when we're coming down like this right here, when we're coming down and the mover's coming down like this, you don't want to get in those trades. And this one right here would end up pushing down. Maybe would have lost there. I'm not sure. It depends on how this candle's opened up and closed. Possible $100 loss. But me personally, I would not be getting in a trade for a long as this is coming down. When you look at this mover and you see it's all red, you don't want to be in going long. I mean, especially with these candles, the way they're dropping down, you just wouldn't do it. Then we come over here, and we do the same thing here. We come down. What I've got is as soon as I come down and I've got about 5 points, I will go ahead and put my stop at 1 point. So that way I can, I want it to run a little bit, but whenever it comes down, I'll get stopped out. In this particular case, we pushed down. My target would have been halfway, but this green candle pushed up and got me stopped out before I would have had the opportunity to bring it down. Possibly, maybe you brought it down halfway at this point, but I would not have done it. I would have kept mine at 1 point. So, actually, it wouldn't even be 1 point. It'd be less than a point because that's $20. So, you would be, what was that, half a point roughly? It's where you would end up being. So this one right here, you might have made a little bit more, but I think just getting it down once you start seeing this, bring it down to where you can kind of protect and just kind of break even is what you're looking for. You're not looking to make $20. You're looking to just get broke even, maybe lose a little, maybe gain a little. That's what those $20 are. Same thing with here. This one come down. When this pushed down, you'd be bringing down to at least a point. You might have went halfway, but I doubt it. I would have went right here just to kind of protect it. Once we pushed through this fib, then I would have brought it halfway. And then once we got to this fib, I'd been to here. This one right here did the same thing. We started coming down, come all the way down to this fib here. We pushed through it. We didn't make it down to this one, but I would have brought my stop to right here. It's the same way all the way through this. The same way, the exact same way. There's not been a day that I've checked where you've actually lost money using this indicator and the strategy without emotion. Just use the strategy and do what you're supposed to do, and you'll make money. This one here skewed just a little bit, so let's call it $1,200. I know it's more than that, but say it's $1,200. Let's call it $1,000. You doubled your money over the course of full day from 9:40 to 4 o'clock. So you made about $1,200 because of this one right here. You made about $1,200. But on RTY, let's say your goal is to, or let's say it's on any instrument, that your goal is to double your investment. It's only $500 for RTY. If you make $500 on RTY per contract, you made a lot of money. If you're trading 10 contracts, that's only $5,000. So if you're trading 10, then you'd be at $5,000. So it really kind of depends on what you're going to trade. I know a lot of people that, yes, it is recorded, and I will put this at the end. Actually, you know what? Let me do this right here. Something I usually do ahead of time, and I didn't, is let me give you, I'm going to put this in the chat. This is the website you can go to. It's got a discount code. If you decide to buy these before midnight tonight, you get 20% off. So if you go to this page, it will show both the indicators and also both indicators together. It gives you the pricing and everything. If you order before midnight, you save 20%. So I'm glad you brought that up. Thank you. And it is recorded. I will upload this video as soon as we're done, and I'm going to post it on that same page. So you will be able to watch it, and that page will stay up, but your discount's only good through midnight Eastern time. Is when your discount's good for. So on this one right here, what I suggest is find out, and each person's going to be different. What I was going to say is there's a lot of people that have bought this indicator and that I trade with. They're happy making $300 to $500 a day. You would have made that right here. So at 9:40, actually, see right there, you would be at 9:58. So in 18 minutes, they would have hit their goal. So you would have had, this one called a break even. So you made $200 and made $725 right here. $725, you made 4 trades, 1 loss, and 3 winners. So you're up $725 roughly, give or take, depending on where you actually stopped out. Maybe you took your profit higher. Maybe not. I don't know. Maybe you held this and you ended up going all the way up to here. The goal on this one would have been to get, you can't see it, there's a red line right here. And what that red line is your pre-market high. And that's something I haven't discussed yet. I'm going to hit that real quick. Is you have different levels here. So you can do Fibonacci floor trading pivots. You can do Fibonacci pivots. You have your previous day, which is your blue. Those are levels. And if you look right here, say before the open, right there is the previous day low. And if you look across, it actually played a lot of support and resistance off of this both ways. And then you have your pre-market low and high is your red. And that's what we're trading for. Now, one thing you have to remember is if you have a opening range, let's do this right here. Let me open this up and let me turn this indicator off. And I'm going to show you only the pre-market. So if we go to pre-market, and if we go to previous day, and let's go ahead and just turn that on only. So you just see a pre-market and a previous day. Your pre-market, when it goes up and makes this high, that stays the rest of the day. And because at 9:29 is when your pre-market stops, because you start at 9:30, so pre-market starts at 9:29. Here is your low. It actually made the low right there. This is in after 9:30 in the morning. So what we're looking for is we have an initial balance in the pre-market from right here to right here. And then you're going to have, let me add this other one so you can see the opening range. And this will make more sense of why we trade what we trade. Let's see here, if we do right here. So what I did was I added the opening range, and then we have our pre-market low and pre-market high. Usually, when the open range, or when one of the pre-market low or pre-market high is inside the opening range, it would usually go the opposite direction. In this case, when it opened, our opening range, our pre-market is here, our opening range low is here, and look what happened. If you had caught that bounce, which you would not have been right on the bottom, we know that, but if you would have caught it and rode it all the way up at $1,740 on that trade. Now let's look at it realistically. Where do you think you might have caught in? Now this is not part of the strategy. This is just kind of letting you know direction. So let's say that you would have played that mover right there. That's where the mover will come in handy. If you come down and you bounce off that, and then you close above the mover, and then it takes off, you get in there, and if you held it, which you probably wouldn't have done, but if you held it, that's $1,485. Let's say that you're looking for a $500 profit. If you brought this down, your $500 would be right here before it even made the open range high. So you would be looking at $500 right there. So if that's your goal to make 100%, you would have made it right there. Now that is before the open range breakout. So that is one way you could trade this. But we're going to talk about that on another training video. I'm going to try to keep these to about an hour. I don't want to go too long because people's interest gets lost on it. But you have this open, you have the previous day previous day high, low, and close. So you have a the high here, and you have the low here. Then here's your pre-market. We also use current day. We use the current session. All of these are levels that we want to use for support and resistance. When you find these levels and they stick in here, you will notice that your price will trade back to those levels. So this indicator is better than most indicators because most indicators are lagging. Like this spy the mover. That mover will not turn green until price has already passed it. So this one turned green when this one here closed. So you can see there's a difference here. And by the time it turned green to tell you get in it, it's already moved up. See, 75 to, it's already moved up 2 points, which is $100. So when you've already moved up to this, maybe it's too late to get in it. And that's why you'll see them go up and they'll pull back and they'll start chopping a lot. But on the Ranger indicator, it's real time. You already have a high there, and if it pulls back, it may trade up there again. But that line will stay there until a new high is made. Same with this low. Initially, when we opened up, our low was here, then it was here, and it stayed right there. And then when this one broke, the low started moving down, and then it came over here, and then it started moving down here. So this low kept on moving, and when we find that we have our high and our low, and then we have our open range breakout from 930 to 940 is here, that's a good indication that we are going to go long, usually all the way to pre-market high, if not higher. So let's just say you had got in this and you went long and you weren't too worried about all of this stuff. You just got in here and your profit was there and you weren't doing anything about that. Well, if you got in right on that, you would have lost on, so you'd lost there, you'd lost twice, and then you would have made one. So you would have been $690 if you had done that. That's still your goal. You lost $100 here, $100 there, and then you made $890, so you're at $690. Or you could play this and chase it the way I do, and you would be up actually more money doing what I do than doing it this other way. So just because you've got your profit target at the red line, that's the strategy. That's our ultimate goal. But you still want to chase through your different levels in order to get to the goal that you want. And that's how I trade it. It works very well. I trade it every day. These are the two indicators I use daily. I'm working on the bot now. As most of you know, I can't trade all day because I'm busy. So I don't hit all the trades. I promise you, I will not ever be able to hit every trade because I just don't have time. I'm doing other things and it's hard for me to find it, the time to actually watch it. I'm working on a bot now, and it will be included into our other bots. And the lease on it's $1,000 a month. So whenever I get the bot done for this Ranger indicator, that will be, in my opinion, probably the best and maybe only bot or the last bot that I build, maybe. But that particular bot, you could turn it on and it would automatically do everything we just said, and you wouldn't have to do anything but turn it on. Now let's go to this right here. So let's open this up, and we're going to go ahead and turn this one off. And I'm going to show you something that it will do that is very helpful, and then I'm going to end this session. So we've got that one. Let's see. We've got, that's all. Actually, it was this one here, I think. I want to make sure all these are turned off so we don't have anything on there. We got previous days on there. And then I'm going to go ahead and add this one here back in. This is the one that I trade with. Let's see here. That one, so that's the mover. Right there. This one. Okay. So this is where I trade. And let's just say that we're going to trade. I'm not making any trades right now, but let's just say we go into Australia. And I'm going to have to update that because that should be 00. So you'll just have to change this on your own. This one here should be a 10. That got messed up today. Make sure it's time. See, 9:20. No, it should be 9:59. That's when the market ends. So 19. Let's see. 1 minute till. I think that's it right there. Okay, this is actually the trade right now. So when we look at this, this is the Australian market. We have our pre-market low here. We have our pre-market high here. Our open range is down here close to the pre-market low, correct? Well, that's a good chance that we are going to go ahead and go long. So on this one, your entry would have been right there, and you would not have got stopped out anywhere in here. If you'd played your fibs, you might have already taken profit. Let's just say that right there, you're at $135. It's not much money, but it's money. We pull back. Our mover is staying green pretty much, other than right there. When you're trading the Australian market, it's not going to move quite like it is on the London market. The London market at 3 a.m. is actually a really good one to trade, and also on the US Open. I have found that between those two, it'll vary, but usually the US Open will make more money, is what I have seen. But the London market's a really good one. The Australian market is so close to the opening. You know, it's only like 2 hours away, so you don't have a lot of data on here for it to really make a good decision. And when you look at this, you can see that the volume is very low. This is a 1 minute candle, and your RTY is not moving that great. So with it not moving that great, you're going to be in this forever. If we come back over and go to NQ, a lot of times NQ will actually move pretty good. You can see there, if we go back in here and look at that, our entry would be here. The height was right there at 305, so you're almost 3 times the money on NQ than you are RTY in the evening. I have found that NQ actually does better in the evening to trade. It's less volatile. It's easier to trade than it is during the daytime. Um, NQ sometimes has 30.1 minute candles, and it's sometimes hard to do. Like right here, this candle right here is 919, and so this one is like 11 points on that. And then if we go back, which is actually a pretty big candle, but if we go back to today, this one right here is 98 to 67, so you're looking 31 points right there. So during the day, these candles are so large, it's hard to trade on the 1 minute. I did tell you I was going to show you on a 100 tick what it would look like. So right now, we have this 100 tick. In the evening time, the 100 tick is not going to move near as much. But it's sometimes, I found in the evening, I like time candles better than the tick candles on NQ, because time, if you look at this, that is all a lot of chop. But if we go back to a 1 minute, to me, that's a lot easier to trade than those 100 tick. Now, if we go back to the daytime, and we look at this right here, these candles are super huge. You just don't realize it. And if we go to a 100 tick, let's see, this right here, I think you can trade 100 tick better when you've got the volume behind it. And a lot of people don't understand what a tick would be. So let's just do this. If you have, let's just pick one candle out, and I'm going to show you this, and I'll probably call it a night. This candle right here is 100 trades. Not contracts, but trades. Since we're on 100 tick, from right here at the bottom to right here at the top was 100 trades. Now, why is it that this one is a smaller candle? There's still 100 trades from right there to right here. It's not about the price. It's about how many times it is traded. So you have, let's say you have 100 people. And 100 people are going to trade this, okay? They're going to make that one trade each person. So there's 100 trades here, and you've got one person that maybe he bought 1 million contracts, and another one bought 50 contracts. Well, each person that buys, if they bought 1 million contracts here, that is going to push this price, and that price may go all the way up to here. But from up here to right here is still 100 trades, and that's the way it works. That's the way a tick works. So if you didn't understand that message in there, and I'll go over it again, but it's 100 trades, not contracts, not price, none of that. The same amount of trades from here to here was the same amount of trades from here to here. The only thing different is there was a lot of little trades in here, and they stayed within basically the same price. This one right here was the same amount of trades, but there was so much volume in it as far as like how many contracts that it made the price much different. So that's how the tick works. So when in the evening time, when you have a lot less volume, you will see that there's not that many trades going on in here. And that's why sometimes if you go on like a 2000 tick, great, Dave. Thanks, buddy. If you go to a 2000 tick, sometimes you won't even get but 1 or 2 candles all night. But if you go to a 1 minute candle or a 5 minute candle, it is incremental. Every minute you will have a new candle. But when you go during the daytime, it is hard to trade a time, because like this right here, this is from, call it 1553 to 1554. So let's just go ahead and draw from right here to right here. Now we're on 100 tick right now, okay? And let's go ahead and change this to a 1 minute. Okay, the 1 minute we saw how many candles were on that. Now we've only got really, I guess, barely part of that one and 2 candles. So see where we are here? That's hard to trade. That's very, very hard to trade. I mean, you're looking at the same amount as this one here. So we go back. We're going to do right there. Now, would it be much easier to trade these candles? Look how much money you could have either made or got stopped out up here instead of all the way down here when you look at the 1 minute. There's a big difference in them. And that's why you want to go ahead and jump in when you have a lot of volume. You want to go to a tick chart. When you don't have much volume and it's just barely moving on time, you want to go to a time chart. If you went to a 5-minute chart, the mover works great on the 5-minute. Sometimes you have a huge candle though, so sometimes it's hard to trade. Like this one here, you've got 78 all the way up to, so right there's a 50-point candle right there on a. I mean, you can't sustain a 50-point drawdown. I mean, well, I won't go 50 points. Some people will, but I won't. So on this one right here, this is going to be that one. The open for the Australia. So let's go ahead and do this. Let's go back in and change it to a Hong Kong. So if we go to a Hong Kong, and this one, the time's right, it's at 9:30. So if we go in there, it's not 9:30 yet, so we have nothing to trade. So unless we go back to the Australia Open and trade based off of the open range in the Australian market, right now we're not going to trade at all. Not in the strategy that we're talking about tonight. So does anybody have any questions before I end this? We're just over an hour. I want to keep them an hour or less if I can. Saw some people come in a little bit late. This is being recorded. As soon as I get done, I'm going to go ahead and put it on that site. Again, this is where you go. The video will be on there here within an hour or so. I'm going to put it on there where you can watch it. Keep on watching it. The more you watch it, the better you're going to get. I know the strategy like the back of my hand. I know you don't, so it takes a little bit longer sometimes for people to pick up. What I suggest, again, don't trade this on live money until you fully understand the strategy. Take it 1-2 days, trade it on a sim account, and make sure that you understand what you're doing. And it's pretty simple, yellow to red. That's really basically the strategy. If we come back over on this one, we look at this, we can see yesterday's Hong Kong session, and this one right here, right there's our red pre-market line, so you would have got in right there, and your target would have been here, but that's not to say you wouldn't have kept going. But to right there, that's $175 per contract. And if you would have went ahead and chased it, you see this big old candle, just go ahead and move it on down there. When this started pushing through and it went through this level, then went through there, then pushed through that level, your stop would be right here. You went from 175 to 305. And that's per contract. That's in the evening. That's on NQ right there. That's just trading, NQ on the Hong Kong market at 9:30, which is going to be in 15 minutes. Well, guys, I'm going to go ahead and kill this live stream. I hope you learned something. You're going to be able to watch the video. Again, that link I posted in the chat. That chat, you can click on that, save that link. That link will stay up. Every time I do a training on the Ranger and the Mover, I'm going to post the videos in that chat. There will be a new discount code on there the next time I train on it, which I'm not sure when I'm going to do that. I want to show different strategies that we're using and what we can do. So any questions at all, open to email me anytime you want. You can go on the website, click on the contact. I get all those emails. I answer them personally. If you need to talk to me on the phone, I'm available. just send me a message and with your phone number and stuff and the time that you're available, and we can do it from there. I appreciate you guys. Thanks for everything, and you enjoy your night.